Hello, if you're just joining, let's just wait for a minute and so that everybody can join. Hello, is anybody there? Let me see.
You work 8 hours a day?
180 is everywhere. Oh, so we have 13 people here. All right, cool. We have Amy. Amy is always there. Cool. Hello, welcome to the show. It's a show now. Yeah, so this is just so that we talk about what's going on in the charts and what I think it's going to happen. And you can see Bitcoin is actually just bouncing at my 0.5 Fibonacci there. Yeah, it's basically bouncing at the Fib here. Oh, I have to make this one smaller. All right, so welcome to the channel. This video is just so that we try to examine the charts and see what's going on and try to predict the future basically. That's what we're going to do in today's show. So welcome, and I hope you're well seated because this is going to be a wild ride. All right, let's begin. Now, yesterday I was talking about a potential price increase and no one understood me. I mean, I quite literally, I did not have anyone who was siding with me that price is going to go up. A lot of people told me that, the stochastic is in the overbought, and so why do you even think price is going to increase? I mean, even here, I still think price is going to increase even from this chart right here. You can see the stochastic coming down like so. Now, something which I was teaching some people in the other video, that was actually in the private premium video. Now, I'd really love to make all of this, totally free, but it really takes a lot of work. Like, really, I talk for like 4 hours sometimes, and so it takes a lot of work. And it's just $38. It's not too much. So anyway, I was trying to explain, and the next live class will be this Sunday, Sunday 9 o'clock 9 a.m. UTC time. We will be having a class on the RSI and stochastic, so we'll be having a class on these two. Now later on I would still make some videos here on YouTube for everyone on these, but the live class is such that people can ask questions and there are more, like it's has a lot of detail to it. So yeah, as I was saying in the other class, I was saying that the stochastic indicator shows momentum, price momentum. So what you're basically looking at here is price momentum. And so what that means is that this should always be going up. in the in the most basic form, it should always be going up to show that price momentum is increasing. When you see it starting to decrease and price is also decreasing, that brings about a divergence, showing you that the downward price action that you see is not legit, it's fake. It's going to go up when you see stuff like this. Now, you always have to start by the higher time frames because they are the ones in control of whatever price action you are looking at. Now, we will go to this other chart soon where I will show you the 3-day and the weekly time frame. All right, so this is Bitcoin on the 1 hourly time frame. We may as well just start on the 4 hourly so that we can get a bit more like an overview of what has been going on. Now, these that I marked here, I hope everyone can see that. If you have any questions, you can just let me know in the comments here, so we can all talk. I like the YouTube live streams better, bro. Oh yeah, that's why I started to do predictive analysis videos on live streams. They are better. You can ask questions and it's more of, you know, a two-way sided thing. We can communicate. You can tell me what you see in the charts. I tell you what I see in the charts. So we are all, you know, learning. No one really knows. We are all in a bubble. We are all guessing. We are all guessers. So the winners are people who guessed, who say guess more, who guess better. So yeah, so we are all learning here. It's not like I know more than you, you know more than me. No, we are all learning. It's a learning process. You will learn one strategy, develop your own strategy. Your strategy may be better than someone else's who's been trading for. I got one guy who told me that he's been trading for about 20 years, I think. I've barely been alive. So some people follow here who are less than 20. I got a guy in the Discord group who is like 13. I don't know where he is now. And he could also make a trade and, you know, win. So it's all a learning process. Everyone is learning, and so that's why I decided to make predictive analysis videos, you know, live, so that we communicate together. All right, so here I was looking at these charts yesterday before I, you know, switched my mind from bearish to bullish. In my other live video, I was also talking about something here, which I believe some of you may have, you know, had an idea of why I was saying that BTC is bullish. Now, if we come here on the 4 hourly time frame, let's go back to here. Yes. Now, we see this downward price action happening here. Now, this chart looks a lot like the daily chart from the all-time high. This chart, it looks a lot like that. So I am anticipating, I am you know, having in mind that there could be a reversal somewhere, you know, to cancel out the 10k, 7k and even 3k predictions. I am keeping that in mind. So this chart looks a lot more like that, where we have price coming down from here. So why is this thing on blue? All right, so we have this type of price action. What the hell? All right. So we have this from here, and then we come down into a bear flag like so. We fall into another bear flag and we fall down here. Then this takes off from here and goes like so. I am anticipating that if this kind of structure was to repeat itself on the daily from the all-time high, that will keep us somewhere around 48,000. So I'm also keeping that in mind. All right, I know that may have sounded funny, but it's exactly like so. Now, what we see here is this is this candle right here. If you look like so, you will see this is an extremely bullish pattern. So it's like price actually fell off a cliff from here, which was validating this bear flag here. Yes, it was validating this bear flag here, but it did not go for the target of that bear flag. It actually went for the target of the wedge here, but then stepped up and came back up, went above the resistance here. So this in itself could be seen as a descending triangle here. So it went down, went up. This was the resistance of the descending triangle, and then it the support of the descending triangle, which in this phase right here would be the resistance. So here this would be the resistance, but price broke through that resistance, broke through the resistance of the descending triangle. So this downsloping trend line right here, price also broke through that, and it went to the upside. What's the target of a descending triangle? The top of the triangle. And so we have price going to this top right here, and that we can also see it here. Then it plummets. Now when price is going up, what are we seeing in the stochastic? We see the stochastic from here. What are we seeing here? We see the stochastic if we draw a line like so, and we also draw a line like so. What do we see in between these lines? We see that price started to go up and the stochastic also went up. This should be as a pro tip. Even if the stochastic is in the overvalued, it is just an indicator of, say, overvalued territory. It does not necessarily mean that price is going to go down. What you want to see that should show you that price is going to go down is a bearish divergence, which means price should mark a higher level in the chart, but you see a lower stochastic, which is what we see here. So we see this higher level here, but here we see a lower level here, which is corresponding with a higher level in price. That means the pressure that is actually pushing price to the upside has dropped, and then that momentum is actually going down. So this upward price action that you see here, you should see it as fake. That should make you start to build up your short positions from here. Yeah, so in this type of example, you would actually want to go with, say, a 5x leverage short position. Yeah, because you know that it may as well continue to go to the upside. To where? To the target of the descending triangle. This is how patterns work. They like to go for targets. So even if it goes back up here, of course it will go to the target of the descending triangle. But that does not mean it's going to go back to the all-time high. It will go to the target of the descending triangle and then still go to the target of that descending triangle to the downside, which will actually be what? Where is this? Which will actually be, all right, $16,900. Well, it did go there, yes. Yeah, it did. Now, so later on it will go there, but as it is going up here, when it crosses above here, it shows that it is extremely bullish. Yes, and I'm saying this because we may as well just witness the same thing happening now. All right, so that is that's the theory that I got from here. That's the exact thing that I got from here, and that's also, let's cancel this as we move along. And that's also what I got from here. That's the same thing I was looking at here, and you see the price pushing up, but you start to see the stochastic dropping somewhere here. In the higher time frames, like on the 3-day time frame, you'll see it happening. Then it came here and dropped. Yes. All right, now that's exactly what we have, the kind of situation that we found ourselves in right here. Now, so if you are here, if you understand so far, just let me know in the comments so that we can move on. Please, do you think we done going down? Well, that question actually makes me think you're afraid. Maybe you're afraid you did not buy the bottom, you know. And that's why I started buying at 17,100, yes, and 15,700. Those are the two, my two buying areas that I bought BTC, and I converted all my altcoins to BTC except Chainlink. Why did I do that? Because Chainlink was undervalued as compared to Bitcoin. Now, Chainlink always performs better in the bear markets. So I did not really find a reason to sell the chain. But I think when it becomes overvalued compared to Bitcoin, I will sell it for Bitcoin. So I go to the BTC or link stroke BTC chart, and I sell link for BTC. So that's basically what I will do. All right, so we are there, a big buy here picking up. What? All right, yeah, that's cool. So yeah, let's talk about this type of structure that we find ourselves in now here. Okay, so when we see this chart right here, what do we see? We see a bear pennant. Yes, so that's our bear pennant. Let's move this here. Okay, now good. So we see a bear pennant on the 4-hourly time frame. Yes, all right. So normally a bear pennant is a bearish continuation pattern, so it means price is going to continue going to the downside. Yes, so we all know that. I know that, you know that, we all know that. But did price actually continue going to the downside? Yes, it did, and it went for the second target of the bear pennant. That second target is at $15,500. I was live on Instagram and I gave you this target. It quite literally bounced off of that target. Yes, yeah, everyone knew it bounced off of the $15,550 target. 550, yeah. I made this target on Instagram, and I still have that. I have a chart where I show my BTC area of interest, and I think most of you know that target. If you are not yet a part of the Discord or Telegram group, I have the links in the description of this video. Click the links and join the groups where I post my analysis daily. I update you in the moment. And I also am doing a $50 to $10,000 challenge, which I publish in these groups for free. So you can join these groups, and then whenever I make a trade, I will let you know when I'm entering into the trade. When I get some profits, I also post them there free. So join them now by clicking the links in the description, say after this video. So we went for the first target of this bear pennant. Where is the first the second target of this bear pennant? The first target is here. The first target is here at about $15,923. The second target is here at about $15,490 or $15,500. That $15,500 is this target here, and the first target at $15,900 is this target here. The next target of the bear pennant is this one. That's the third target of the bear pennant, which will put us somewhere around, I think, around 12,000 or 14,000, I think. Let's just measure it now here. So we take from here to where it broke down from that target, and yeah, $14,844. Now look at something here. You see that this is what makes me think we will come down here no matter what we do. This is interacting exactly at the 1.618 Fibonacci retracement. I will be teaching Fibonacci this coming Sunday with stochastic, so you don't want to miss this class. Yeah, because I learned this by myself. I also watched some videos and read some books about this, but what I'm going to be saying about Fibonacci is what I noticed by myself from all the years of being in this. So we came down here, and you see it bounces exactly at that 1.618, like to the dollar. Yeah, this is really going to happen, but I think we will be in a lot of bearish divergences before that ever happens. Of course, it may just dump right down from here. There is no assurance. It may never go up here. All right, so yeah, that's the risk we have to take with this game. It may as well just come down straight, but I don't think that will happen. Anyway, so now we did not come for that target. We instead went to the upside. Now you can also see another pattern here. So we have talked about the bear pennant. Yes, so price drop from here. What's the ultimate target of the bear pennant? That should put us somewhere around 10k I think. Now, the ultimate target of the bear pennant is by measuring the distance from the pole, from this pole right here, to the bottom of the pennant. So when we measure the distance from that pole to the bottom of the pennant, we take the pole and we put to where price broke out of the pennant. Now, where do you know where the pole begins? You take price from here to here and you put like so. It should cross about 3 candlesticks. This has crossed 1, 2, 3. So you take it from this here, where price broke from this ascending wedge to the downside. You are taking your measurement. The measurement of your pole should start from there. And so you put that like so. That's to the lowest point of the bear pennant. That lowest point is the body of the stuff, the candle. All right, so this right here will give you a target of $11,800. Yes, so but price did not come here. It only went for the second target of the bear pennant and reversed to the upside. Now that already is telling us that there is some key level here that price does not want to go. That does not just want to go for this target right here. Now we will start already. As I've been saying, a good patterns trader is someone who is you are always anticipating the next pattern that will form. And so you want to get your targets based on the pattern that you think is going to form. What happens next should confirm another pattern in your mind. And so from here, we should already start looking at this as a descending wedge. So that descending wedge should look like so. Yes? I'm going to put that in another color so that it's not let me take this away, since it's not going to the downside. So we have to start measuring it as though it will go up, and we would know to what extent it could go in the up direction. So now what do we see? We see a descending wedge here. Yes. Now, so what's the target of the descending wedge, you might ask? The target of the descending wedge is taken from where price broke out of the wedge to the upside. So the first distance between the support and resistance, that's the target of the descending wedge. And we measure this and put here. That should tell us where price is going to go. And behold, price goes exactly there. This bounce up here is the target of the descending wedge. Now, don't come to tell me that the SEC did this, or Brazil legalized something and that's why we pumped. No, we went for the target of a wedge. That's the reason why we pumped. Okay, now going out of this descending wedge, so we can already know the various targets of the descending wedge. What's the ultimate target of a descending wedge? The top of the wedge. The top of that wedge is sitting here at $17,623. Ladies and gentlemen, you all know that I was talking about $17,600 as being a level where we must go. In fact, I had a chart before I started to long to that target. I had a chart that was actually prepared to short it from $17,600, and I may as well post this in the premium groups of us shorting this. You didn't mention the name of the coin you talked about. I was talking about Cat Girl. If you were in the Telegram or Discord group, you would know. So the target of the descending wedge is up here at the top of the wedge, the top of this body here, where we have this bearish engulfing pattern. That's the target of the descending wedge. So now, so we have $17,600. So we have actually, so what is our first target here? Let's put this in blue. My best color is blue. So the target of the descending wedge, first target, $17,191. We went to $17,155 here. So first target checked. Yes. Second target of the descending wedge. What's the second target? So the second target of the descending wedge will be the distance between here and here. Now, why am I taking from here to here, not from here upwards? I always want to be the body closest. Yes. And actually that will, but that will still be in line with the first target here, around here. So we'll just take this one. It's important to always take the body closest. Yeah. So when price hits this close here and also hits this close, so you are looking for price close here and price close here. Don't go straight up here to nowhere. You always want to hit a close before you are taking that as a target. So we can eliminate this and take only this one. But this would be the first one because you want the first two places where price closes. So price closes here and breaks off of this place right here. Yes, so that's your first target. You want the second close. So this is the second close, actually, this one to this one, and that should give us the 17.6 thousand dollars here. Yes, yeah, 17.7 thousand dollars here. All right, cool. Now we can also see a lot of pattern forming here. This was the as price narrowed into this region right here, I was already looking at this as a bull pennant. Yes, so this is our bull pennant. Price escapes escapes prison or escapes jail from here and narrows into this pennant here. Now what do we see here? And this is the reason why I thought we were going to rally yesterday. When price broke out of this pennant, as I was saying in the other video, I placed my entry here and stop loss here. As I was saying in the other video, I think that was for premium, I believe. Now, I was saying, and I've also talked about that on this channel, the whole idea of premium videos. It's not like I'm not going to post normal videos here. I do, just that in premium, it's a lot more detailed because people ask all sorts of questions. Now, I was saying that when you see a bull flag or a bear pennant, check the stochastic. What's going on that stochastic? Is it showing that the momentum is there to push price to the upside? Yes. Also check for fake outs. This is a stop hunt here. There are a lot of people who are prepared to take this rally, to go on this rally, but they did not go on it because they were stopped out here. So when I saw this drop, this close below here with ending with this bullish engulfing pattern here, I was already starting to suspect a future rally. Now, as price went up here and closed inside of the support of this bull pennant, so this trend line here, this is the support of the bull pennant. Yes, and price closed inside of it. Now, I was waiting. I was already, on my mark, knowing that price will break to the upside. Where I issued the call is when price came down here and formed another bullish engulfing candle. I knew that is it. Price is going to go to the upside. Now, did I wait for this other green candle to form here? No. I came here and I took this candle, and I'm just going to show you what I did here. I came here, this candle dropped below. Yes, all right, but let's take the Fibonacci here, and if you take the Fibonacci from top to the bottom and you put it like so, no, bottom to top, because it's price is going up from this week here. Okay, now you see here that price basically bounced off of the 0.618 Fibonacci retracement here. You see the same thing happening here, bouncing exactly at the golden pocket here before forming this candle. So this type of price action made me think, yeah, it's going to go up. This was my confirmation. This confirmation of price closing above the 0.382 Fibonacci told me that price is going to go up. Now, if you are attending my classes, then you know that these are the three most important levels in Fibonacci: the 0.382, the 0.5, the 0.618. This is where you want price to go to the upside or to the downside. If this comes and closes below down here, well, just say your prayers, because it's just going to continue plummeting to the downside. But since it went up and it came down here with strong selling pressure, average relatively high volume here, but then it still closed above the 0.382 Fibonacci with a green candle forming a bullish engulfing pattern. Well, this was supposed to go to the upside. Then we have the inverted hammer here. Inverted hammer means that the sellers did not succeed to push price to the downside, so this is still strong bullish price action. And then we have the next candle engulfing the entire of this price action and pushing price to the upside. You cannot call this a fake pump. You cannot, because this is breaking not only out of this bull pennant here. This is not only validating the bull pennant. Now remember, with patterns, price will still go back to meet the target of what it left before. So this right here is what it left before. That's why I put my candle, my pointer up here. Yes, because it had to break up here to go to the upside, but it did not. It went down instead. So when it breaks back up here, I know that it's going back to validate this target. It's going to meet this target, which will be at $18,000. Now, another thing, when it validates this target, and really, as I say, this may not happen, but I'm betting that it will happen. Okay, we do have not only the bull pennant here, we also have an inverse head and shoulders pattern here. So let's cancel a lot of that because it's beginning to look a lot dirtier. So okay. All right, this looks cleaner. So we have the bull pennant here, we have the inverse head and shoulders pattern here, and we have the descending wedge here. All of these are, all of them, they are bullish patterns, and price is following them as we speak. Now, we also have this trend line here. You see that price has always been bouncing, always trying to go up. It comes down and it still goes up. Here it comes down and it still goes up. It finally breaks off of this with relatively higher volume than the past previous candles here. Yes, and the stochastic is in the overvalued, but that does not really mean that it's just going to go down. Even if you're seeing the cross here, it does not really mean that this is just going to plummet right away, because as price is going up here, the stochastic is going up. What is that telling you? It's telling you that the momentum of this price action is for real. Now, if we looking at all of this, we know, we believe that price is going to go to the upside here. Now, if we take from here, all right, so we have our, let's take it slowly here. So we have this, take that out, and then we have this here. So we take this and we're going to put another color here. Let's take no, not white, let's take red. I don't know. All right, let's take this, whatever this is purple, I think. So let's put that in huge one like this, and then let's take this one. So from down here to the top right here, now that's the neckline for our our inverted head and shoulders. Now this right here, this is the target for the descending wedge. Yes, so this is the ultimate target for the descending wedge here. And if we put that there, if we put that here, because price broke out of here for the descending wedge. Yes, price broke out of here. Yes, now the target for the descending wedge to the upside is the exact same target of the head and shoulders pattern here. So if we take this is the neckline of the head and shoulders pattern, and we are putting it here because price basically broke out of the head and shoulders pattern. Now the head and shoulders pattern's target is supposed to be here on the shoulder. That's the second shoulder. That's where the head and shoulders is supposed to be validated to the upside. But I told you some time ago on this no, actually here, but you can also see a semi head and shoulders pattern here. No, not there. You can also see this head and shoulders here. Yes, and this. Yeah, it looks like a person actually, because if we just put like this, that will be a person. This is the nose, these are the eyes, like so. Yes, and ears will be somewhere here. Yeah, so okay, now so if we are to take the target from here and we put here, yes, that will be the exact target of the descending wedge. So we have two confluences up here. Now you also see these wicks here. What do these wicks tell us? These wicks tell us that this will be the area of supply. If you are trading supply and demand, then you understand what these means. Now all of these supply, demand, support, resistance, they all come to mean the exact same thing, just different names and different ways of looking at them, but they all come to mean one thing. Yeah, we are all in a stream of guessing, and all of these patterns should only go back to mean one thing. Now this is above this right here. All right, so okay, so that's for that. Let's take this away. It's really beginning to look like a person. Okay, so right here, what is going on? You can see that price is actually just bouncing at the 0.5 Fibonacci. It closed above it, actually. It closed above the 0.5 Fibonacci, and we do have it not closing above the 0.382 Fibonacci, which is why I have not issued another long position. We are trying to be careful here. When price does close above the 0.38 Fibonacci, then you know that price is going to go for these targets up here. Now, by my metric, I think the ultimate target for this will be somewhere around $18,000, but I was also bringing up a target of this target here. So if I take from here to here and I put here, now that should give me somewhat around 18,700 down here, because this right here, that will be actually $19,000. What am I doing? I am taking this from here down like so, and I'm also taking this here and down like so. I know it's a bit messy, but just follow along. Yeah, around 18,900 to 19,000. But I'll be looking out for some, fake pumps right about 18,000. This is the top right here. So from 18,500, or just from 18,000 itself, to anywhere from $18,000 or $17,990, roughly $18,000. I'll do more calculations before I issue positions. From here up to here, I will be building short positions. That's where I will be building short positions. Yeah, so this 5% move here will be where I will build short positions here. And I'll tell you why exactly I think price could go up here. And if I was to build a short position here, I will be targeting 11,000 from here. I will be targeting price right down to around 11,000 here. Yes, I will be targeting this type of move if I saw this. Okay, now this is all assuming that price does close above the 0.38 Fibonacci here at around $17,000. To be very safe, you want it to swallow this wick here and even close above here. So to be extremely safe, if you want to be safe, 17,200 is our best bet to go up to these targets here. So that's how we do. We trade and we anticipate the next impulse, and then we go in again. You don't just want to buy here and hope that it goes up. Hoping is not a good move in this game. All right, so All right, so that's it for this price action that we are seeing here. Now, here is why I think all of this is possible. If we come here, to the 3-day time frame, and I've been talking about this time frame on the channel and on the TikTok. I've been talking about this a lot of the times, that always have your eyes on the 3-day time frame. For the night is dark and full of terror. Have any of you watched Game of Thrones? Is it Game of Thrones that it talked about this? I think it's Game of Thrones. There's some lady who came and she would say, for the night is dark and full of terror. I think she's a witch. Any of you watched that movie? So now I'm creating a website. I'm working on a website, and I intend to do a lot more things to help people and stuff. But I need a name for it. I do not have a name yet. If any of you have an idea about that, just let me know. Yeah, Game of Thrones. So, all right. So, this is on the 3-day time frame here. Yes. Now we can immediately see a bullish divergence on the 3-day time frame. This 3-day time frame is where I was talking about this fall, and we can see it here. Be very careful with this time frame. It does bring about a lot of crashes, and it can bring a lot of rallies. You can see what I'm talking about here. When Bitcoin bounced at $15,500, you can see what happened. It went up to $25,000. Yeah. So this is no joke here. This is really no joke. When you see me changing my mind from a purely bearish guy and I'm starting to be a bit bullish, know that I understand what I'm talking about. The 3-day time frame, you can go back to any level. You can see what the 3-day time frame is doing. You can see it here. Look, this is it here. Look at the bearish divergence here on the 3-day time frame. Price went up here, but look here, from here to here, the stochastic is going down while price is going up. Look what happens. Dump. Look, the all-time high. Look at the all-time high. We had this high here. Now from here, let's just put that down so that it's noted that we found this on this channel. All right, so we see here, look, price went up. What happened to here? This high right here. Look, from here to here, price is going up. Momentum on the 3-day time frame is decreasing. What happens next? Dump. Let's go to the all-time high. Price goes up onto here. This is at $60,000. Now I was talking about selling here at $63,000. I have a video of that on this channel. Look what happens here. Look what happens here. Okay, good. Now look at the all-time high at $69,000. But we see a drop in momentum on the 3-day time frame. What happens next? We have been suffering the consequences of this dump right here. We are here today because of this, not because of FTX dump, not because of 3AC Capital, not because of BlockFi, not because of Terra Luna, because of this. This is all written in the chart. You can see the same thing happening here before the rally. As price is going down here, what's happening on the 3-day time frame? The stochastic is dropping, and I was here. I remember watching a video here on YouTube, and there was this guy, I think that was Robert Kiyosaki or some other guy. I think they were all saying that it's going to zero. I bought a lot of ADA here because of this time frame here, and I bought at about, that was like how many, like $1. I think around 97 cents. 97 cents, and I also bought Aave at $175, and it pumped to about 52 or 54. $54. It did not go back to the all-time high. I sold at about $398, but I bought here because everyone was saying, well, it's going to zero, we are, this is it, it's ended. this time frame told me that we are going to go up. This right here. Now, as it started to go up here, you see the momentum also increasing. You can use this time frame and you will see its results. It works tremendously. And now we are at another point. Yes, you can also see it here. It being in the overvalued is nowhere you want to long. It being here, you don't want to be longing here. When the 3-day time frame is here, you don't want to be caught in a long here. I also remember one time I was issuing some calls in the Discord group. I remember issuing some daredevil calls, and I exited some trades in a loss. And some people were like, no, this, I lost so much on this trade. Why did you exit? We rallied. I told them the 3-day time frame is in the overvalued. You don't want to be caught in a long when the 3-day time frame. I remember, I think it's like here. Is it like here? I think it was like here, I think. And then around 2 days later, we had a huge fall. And yeah, the news will bring up stories, but yeah, that's just all. That's just it. The news will always bring stories. But now we are in the undervalued on the 3-day time frame, and we can see a bullish divergence there. So what's going on here? First, we are not only in the overvalued by the stochastic, we are also in the undervalued by the Bollinger Bands here, and we are forming a bullish divergence, excuse me, on the 3-day time frame. Now, I was saying in the class, in the premium class, that when you see these types of candles, what is going on in this candle? We see that the candle started here, price came down to the came to the downside, buyers bought up to here at the top right here, the sellers pushed it a bit down here, and then we formed this. Now here we are trying to form an inverted hammer here, but it's more like a spinning top, I would say. But here you see that this is looking more bearish, yes, because this is a bearish engulfing pattern. Price then dumps here but comes back up here to form this doji. Now this doji, now after the doji, we are now forming a huge bullish candle. The only way price has to then make me think again of more bearish price action back down to maybe 15k or even 12k is if in this 3-day time frame candle we do dump right down to here, and that may not be so possible, yeah, I don't think that will happen, but this could easily end in a inverted hammer, which will be extremely bullish. Now this is the 7-day MA here, and we are above it. You do see that we did reject from it on this candle here, but we are above it on this one. So I do think we could continue going up to here. Now you do see the space that will mean. Now if we do go up to there, then we could have a possible retracement here, and then the maximum target here will be 21k. But 21k will make me think we are going a lot more to the upside, because that will mean that we have surpassed this this support here. So what's that support? This is the support of the, let me just change that color to yellow. All right, and make it a bit bigger. Okay, cool, great. Now this support is this from the descending triangle here. So this is on the 3-day time frame. If you're lost or confused, this is on the 3-day time frame, so do not be confused. Okay, now if we take that from here to here, then to here, and we put it like so, and we change the color to yellow. Cool. Now, so we do have these targets to the downside, yes, and we do see that BTC met with this target here to the dollar. Yes, to the dollar. There is no argument here. This is literally in front of us. Let's put that correctly so that we know that it came for its target. Cool. Now, if you even look closely, you will start to see why I say this thing can be funny sometimes. You see that it did not really come to the target here, but this candle only dumped down here to validate this target, and it's now on the way up. So the next target should have been this one. Yes, from here to here, that should have been the next target, but it's not come for it. And I did give you another example of price actually going up, like so. Yes, so if it does go up to 21,000, as we were saying before, that will mean that it is extremely bullish, because it has broken this this resistance here, which is the support of the descending triangle, which the descending triangle is overall a bearish pattern. But if it breaks that support back to the upside, then this would have just been some kind of scenario where BTC fell off a wagon and then mounted back up, and it's going back to the races. So yeah, that's how I would see it in my own mind. But anyway, this is what we'll be looking out for here. So actually, for now, that's like a bit more medium term price action, which is what we would expect. We would expect strong resistance here, very strong resistance here, because this is the support of the descending triangle. Then we also see that even in the past here in December 5th of December, around 5th of December, or say December 2020, we did have this area as a huge zone of resistance. We can also see that of resistance and support, and we can also see that here in 2017, that was the top of around the top of the bull market. So that is the longer term projection here. We will expect huge resistance anywhere here, but somewhere around $17,700 to $17,900, when I will see say some bearish divergences, that will make me build my short positions immediately. So that's for the longer, for the say more medium term price action. For now, we will be waiting for price to go above this region right here, which will be the 0.382 Fibonacci retracement level. If it does go for the target of this, this will be the target of the descending wedge here, that will make us know that, all right, this could actually continue going to the upside, but it needs to fixate on top of here. The best region, if you see price fixating above 17,200, which will be somewhere up here, that will mean that it has actually, crossed all of this resistance here, and it's on its way up. The major say mindset there, or bias, should be bullish. You don't want to be caught with, and I also wanted to show you this, you don't want to be caught being here bearish when the 3-day time frame is being overly bullish. Now there is one thing that I found on the charts, which I also find which I do find a bit concerning. A lot more people ask me what I think about the bear market bottom being in. Now, I did make a video some time ago on TikTok talking about, and I will post some of my TikTok videos here on my challenge and stuff. All right, so I did make some videos on TikTok talking about the weekly time frame stochastic. When I was talking about that weekly time frame stochastic, we were still here in the overbought region, but you do see that the weekly time frame stochastic here is now in the undervalued territory. So we are more bullish now than bearish. Now note that it can be here for weeks. It must not be here and it just goes back up. It can be here for weeks. So as we go along, I will be keeping note on this price action that's going to be shown here on the weekly time frame stochastic. So this is telling us that on the weekly time frame, we do have say an overvalued or undervalued stochastic, which could actually mean that the overall trend now is pointed to the upside. All right, so even buying as low as 3k may be a serious bounce. So we could be here for weeks, like you see here and you see here and you see here. It will be rare to find the weekly just going back up like here and here, but you see that mostly we come there and we spend a very long time there. Now my own thought process here, which I was saying earlier, is that we will come for the target of this descending of this bear flag here, which is sitting somewhere around $7,000. Yeah, the 3k price drop will be really yeah, around $7,000, or no, not there. We put it around here. If we put it here where the candle broke to the downside, that will put us somewhere around, that's supposed to put us somewhere around, oh, I'm measuring on the weekly. If I measure on the daily, that should put us somewhere around $7,000. Yes, if we measure here, that should put us somewhere around 7,000. Let's see on the daily. Alors, it puts us at $7,848. But in other time frames, if I go like on the 4 hourly, that will be 7,193. But say on the $7,000 range, so I take from 8,000 or 9,000, that's where I think the bottom could be. On the lowest case possible, I would say $3,000. Lowest case possible, I would say $3,000. And I think if we go down there, we will bounce and come back to my area of interest. Now, I will put the area of interest after this video as a YouTube post, so that everyone can see, even people just browsing through YouTube can see that in that area of interest. So I do think if this goes back up to somewhere around $18,000, I don't see it going back to 21, 22, 23. As it continues to go up, a lot of people get more interested, and so they start to FOMO in. That makes them believe that it's just going to continue going to the upside. But what I am watching for will be the 3-day time frame. If that 3-day time frame gets overvalued again, then we should be expecting price to drop from there. Of course, it all comes down to our relying, and it's quite literally bouncing now at the 0.5 Fibonacci here. So if it does bounce off here and closes above $17,200, then we do expect price to continue going to the upside. All right, so that's pretty much the end of our video. If you liked it, press the like button. Subscribe to the channel if this is your first time watching me. I am Vay, but people call me Vay. Nice being with all of you. If you do have a question, just let me know now in the comments before we end the show. So we already know the targets here. If we do come back down here and close below 16,400, we will dump. We will dump badly. All right, maybe I did not say that. If we do come back down here and close below 16,400, or $16,300, we will dump badly. That will be my cue to go back in, and short the entire market. So we are waiting for price confirmation here. In the meantime, I may scalp, on the lower time frames. I may scalp on the lower time frame for my $50 challenge. In the meantime, I may do that, but in the for swings, I would be waiting for price confirmation here. When we do get that price confirmation, then I will swing this thing right up to that high target with proper leverage and proper everything as we go up. Yeah, you're welcome, Amy. No, you'll be good at this. Patterns are mostly subjective. It has a lot to do with how you see your own environment, I would say. Sometimes I see people and I would suggest a name that is fitting for them. That's if you have the patterns mind, that's how you will always see things. You always make stuff up, the way your mind would see it. That's how, if you are a patterns guy, that's how your mind would be. It also requires a lot of memory, so that you'll be able to remember what pattern is here, what is validating what is invalidating what. Yeah, so now we see the inverse head and shoulders pattern here. Yes, and we also see the descending wedge here. We also see the descending triangle, and we also see this descending trend line here. We know the target of all of this all of these patterns here, and we know what will validate what and what will invalidate what. So but as you continue to be here on the channel and I bring this every day, I believe everyone can learn everything. I don't believe there is something some other person cannot learn. No, I think everyone can learn everything. Everything is possible. If anybody is anything, you can also be that thing. It does not have anything to do with I don't believe anybody was born intelligent or smart or anything. Well, there are some people who are just really crazily smart, but I think you can train your mind into doing anything. It only requires some focus and stuff, and you put the energy where you understand it the most, which is why sometimes I will teach some other stuff, but I like to teach what I think works for me. I don't like showing you what I don't use regularly. I like to teach what I use and what works for me. And I may understand some other stuff which you may ask me about sometimes and I explain it to you, but if it works for you, better. But so I like to concentrate on what works for me. Anyway, GMX, let's see, GMX. Now right here we can see an inverted, no, we see a triple bottom pattern with the neckline right there. We can see that price broke from this pole right here, and it's been rallying up ever since. Now something you have to note: when price descends like this and it goes back up and it's only staying up there, so we find this type of movement, we find it do like so, it's only staying up here, it means the buyers are strong. Now that looks like glasses, yes? So now it means that the buyers are holding this position right here. You only need, this is on the 4-hourly candle, you only need a strong candle breaking up here. That's what you need. This is what you need. You need strong candle closing up this resistance here. That's what you need. Now you could also see this as a double bottom formation here. Yes, so the target for this will be here. Target for this would be 54, and we are getting there. That's how many percent price increase? That will give us 17, actually 19% price increase from there. Now mind you that this would be a bull flag right here. This is to put in the extreme case that price continues to go to the upside. Yes, so we have this bull flag here, but actually that's a fake out up there because we do have some wicks here, meaning that this was the resistance here and people were selling. So we do have this descending wedge here, so that will confirm a bull flag right there. So let's take the bull flag with an arrow. So that will confirm a bull flag right here, and you have to put this here where it breaks away from the bull flag. Yes, now if you draw this trend line and you continue coming right down here, what do you see here? Price actually broke out of the bull flag, came back for a retracement down here, got here, this is the support here. So you can also see another thing here. this is the support here, and it's about to go for the target of the bull flag, which will be up here. So the target of that bull flag will be here. So from here, from this is where price broke out of the bull flag to the upside. So from there up will give you actually 47% increase. God. Now this is GMX. God, they all get confusing sometimes. I don't know what the market cap is. You have to check what the market cap of this coin is, and you have to also check I'll just check that right now, the BTC relationship with this coin. How possible is it that it can actually go up? You can also see this right here, this inverse head and shoulders pattern. So this right here will give you the target of this first shoulder. So this, on the conservative side, this is what you'll be targeting here. Instead of 19% price increase, you'll be targeting 12% price increase right here. On the most maximum case, this is what you'll be targeting, 47% price increase. Can Bitcoin let that happen? So we have to go to GMX BTC. So this is the Bitcoin versus GMX chart, and you can see the exact same thing happening here. So if Bitcoin actually goes to the upside, then you can easily see GMX do that stuff that we're talking about, the 47% price increase. What is the market cap of this coin? If it has a very high market cap, then it will not go up that much. It will not go up that much if it has a very high market cap. So on the conservative side, you could be looking at a 12% price increase. On the medium conservative side, you could be looking at 19% price increase, as mentioned earlier. Then on the highest case possible, you would be looking at the 47 price. I'll check what this could actually do later. But we see the overvalued stochastic here. Let's see what the daily time frame stochastic is telling us. The daily time frame stochastic is actually, I don't think it's going to go to 47%, because here we can see the stochastic here. We can see it here. This is the high right here corresponding with this high right here, but this second high right here does not correspond with another high on the stochastic, which is then a bearish divergence here. So I would say that this could go, if BTC is to go up, I would be looking for the 12%, not the 19%, and not the 47% price increase on this. But this looks relatively new because it's not been around for some time on Binance. So we are looking at 1 2 3 4 5 6 7 8 9 weeks of price action on Binance here. So yeah, it looks micro actually. On the conservative side, I would say 12% price increase here. Yeah, I think I'll look at it if it looks good, just that I don't want to risk my capital. Now we can also see the volume dropping here as price continues to increase. No, I will not risk it on this. I will not do that. I will not do that, because the volume here decreasing on the weekly time frame, this is quite literally a ticking time bomb. You know, it could go up, yeah, but what chance do you have of a crash? You actually have you would have a crash of about 34%, and this is more sure of than it going 47. Yeah, so I will not even touch this, even with a 6 foot long pole. Anyway, thanks so much for, let's see the ETH. Yeah, ETH is basically doing what BTC is doing, and the reason why I was longing ETH in the group yesterday, that's the premium group, is because ETH was in this. ETH is actually dominating BTC on the ETH stroke BTC chart. Now with ETH, this is what I expect. We see that this is ETH on the weekly time frame. Yes. Now wait a minute. Okay, good. Now this is this is the price target for ETH if it came down, if it is to, because this right here is an ascending broadening wedge. Yes. And this is what I find scary for ETH if we are to take from here to here. That's basically zero. So I won't even look at that nor even say that, you know. Yeah, but anyway, that will not happen because the price is decreasing here, and you also find the stochastic also decreasing here. But this ascending broadening wedge will take ETH to about $619 or $500 now. But you see, I was already doing some analysis on ETH here, and let's go to the 4-hourly, then you will see why I think ETH could go to the upside. Now that's the ascending broadening wedge there, huge price action. You see the type of stuff. This is on the 3-day time frame. This happened on a 3-day time frame. I know it sounds funny, but that's it. Now, so you see this price action here. I was longing this yesterday, but this is already on the overvalued on the 4-hourly. So I would expect a bit of a retracement here. Where would that retracement be? I would expect a retracement from here, from the top to the bottom. So top of this candle to the bottom. Retracement back to $1,247. I would expect a retracement there. My stop loss here would be somewhere around 1,232. Worst case scenario. I would have to do more analysis to confirm this, but you see basically the same chart that we see on BTC. Yes, the descending triangle, the but here on ETH we don't have a descending wedge because this will be too stiff. A good descending wedge has to be about 45-degree angle. This will be too stiff. So we basically see the inverted head and shoulders pattern, and that's why I thought ETH was going to go to the upside. You see ETH bouncing here at my 0.5 Fibonacci ratio, and I want you to actually see this bounce. I mean, it's pixel neat bounce. You can see it there. So yeah, I still do think it will continue to go like BTC, and the highest case scenario for ETH will be somewhere around $1,373. That's where I think ETH could top off and then go back to the downside. Yes, go back to the downside. So if it does go to the downside, what will that form here? That will form an M formation. So if it goes like so, and comes like this, this now here will be the neckline. It will have to plummet by this distance. Let's see. We'll have to plummet by this distance. If it's coming here, then we'll check on the daily and see how possible this can be. So that will put us somewhere around $17,999. $17,999. But that, let's see the target for the. So you see that ETH first had a bear pennant. So don't forget this bear pennant. It will want to come back for that target. So we see this somewhere around here. We see this here. Now this is crossing this candle here. You see this cross here. Now this is not random. The cross on the middle, that's not random. Let me show you how it's not random. You can see that that cross is exactly at the 0.382 Fibonacci. So if we are to take the target for ETH's bear pennant, that will put us here, because it will go up if it is to go up anyway, because we are waiting for confirmation now. If it is to go up, the reason why we're waiting for confirmation is because these are longer term price targets. to make a long-term price target, you will have to wait for confirmation. So we have the target of the bear pennant somewhere around here. Yes. Now, isn't that funny? If ETH actually goes for that target, it will be coming back down here. It will be coming back down here. That's if it goes to the upside right here from this present price action. If it does go up here, it will come down here. If it does come down here, it will validate an M formation here. It will validate this like so. And M formation down to here. Now that's eerily similar to the target of the bear pennant. Yeah, so that's what I would expect. That's what I would expect here, if only BTC does what we think it is going to do. If it goes up, ETH will push from here. The maximum resistance here will be around this 1.618 Fibo here. Yeah, but only going back above here, this will mean that BTC has closed above 17.2, 17.3K. That's very bullish. All right. All right, so thanks so much for watching the video. I hope you did enjoy it. I hope you did learn something from it. We will see each other very, very soon. But until then, take care and stay blessed. We will see each other very soon. I will post another video. If you're not in the Discord and Telegram groups where you can ask me questions at any moment, do use the links in the description. All right. The Discord group is better because you can always ask me questions there, or you can follow me on Instagram, then you can still ask me questions. If I do not respond to your question, it's just because I have a lot of DMs. You may go to my post and comment there that you sent me a DM. That way I will know which exact DM to check. All right. Okay.